Today is June 29th, 2025. Call it bearish divergence off a rising wedge breakdown structure where the sell signal could be confirmed here. We never got the solidified solid candle close, where a whipsaw-like reaction straight into Palantir's close on Friday, where long traders, bull traders would really need to defend this airspace here, coinciding with a high volume profile shelf called the 135 minor price support level for the back tests and or retest scenario to hover in up above and re-challenge some of these big time near-term and longer-term bearish and negative divergences that have continued to establish and construct on multiple key indicator fronts here on both the longer term and near term. Make no mistake, these divergences have only continued to construct and establish on multiple key technical momentum indicators going as far back as June of 2023. And that is how large and big as a divergence as you can possibly get there. Palantir here off an ascending uptrend price support level could be a reversion of the mean setup if broken down properly. But make no mistake, the price has now broken down from this near-term rising bearish wedge structure with high volume selling here down below, violating that key near-term support. This structure, make no mistake about it, is commonly known as a bearish reversal pattern. The move was reinforced by its rejection there at the wedge apex, combined with the divergences in the RSI price percent oscillator, hinting that momentum was beginning to decay even as the price continued to climb to the upside, where the 50-day moving average is hovering in down below this key inflection point. If long traders are unable to defend heavily off the 135 handle for that key snapback and or counter trend rally, all eyes will be there on the 50-day moving average, ultimately finding out if it'll be a turn down, where you have the 200-day moving average left behind significantly down here at that red beaded uptrend price support level, in confluence of the concealed and hidden uptrend price support level that I will cover shortly here. That is a whopping close to a 35% spread in between the 50 and 200-day moving average, and sometimes could create a rubber band effect where price may revert sharply toward those mean levels, because the stock sliced through previous consolidation shelves right before this key inflection point, only entering an air pocket on some of these volume profile shelves below the 130 handle, where you have the relative strength index printing around the 52 handle, trending down from overbought territory with no support yet. But again, this is a key 135 handle, which would need that counter trend snapback rally as of now. Price percent oscillator with the bearish cross confirmed, where momentum is beginning to fade. There is deep infused damage being coiled and rattled within these technical momentum indicators. You have a deeper red printing consistent with acceleration lower here below its zero line threshold off the price percenter oscillator histogram. Selling volume is ramping above the 50-day moving average, confirming the distribution phase. There is, make no mistake, there is bearish momentum only strengthening, with volume confirming its breakdown and the relative strength index having room to fall. Watch for the relative strength index to undercut its prime 50 handle. You have the clean rising wedge breakdown. Momentum shift is confirmed in the technical momentum indicator, so you have a very high risk reward ratio to the downside. Make no mistake about it. Even if we get that counter trend snapback rally, long traders, bull traders, they want to snap the 146 handle to overcut that rising bearish wedge breakdown, ultimately re-challenging those bearish and negative divergences that have been constructing and establishing since the year 2023. And usually, the bigger the divergences that continue to construct and establish on multiple indicators only increase the odds for a much larger crash to come. Zooming into some key targets, you have an additional stop loss if you were within the beginning stages of scaling in, up above for call it an 8% stop loss, down to the first target, undercutting its 50-day moving average for a 12.8% crash. And if things get exceedingly bearish for the stock in the near term, back down to the much larger target, the 94.12 handle, for a 31% crash on a complete backfill of the gap, coinciding with a concealed hidden uptrend price support level with a plethora of major reactionary highs and lows really across that entire span of time. I believe we'll have a relief bounce, and it is highly correlated there with the 200-day moving average. Palantir has really exited a year-long rising wedge here, with momentum fading and volume confirming sellers are in full-blown control. The stock now here sits amongst no man's land between heavy support zones, which means it can really begin to accelerate fast, especially the downside where the risk reward favors the odds. Bulls and long traders don't recover the 135 to 138 handle, ultimately taking out the 146 handle very quickly. This may spiral down to the 94 handle where wedges break hard and gravity favors the bear.